Thank you very much, Jan. I'm going to talk for a quarter of an hour about clean energy investment and some of the trends and activities we see around that. Before I do, I just wanted to say a few words about Bloomberg New Energy Finance. We are part of Bloomberg. We were actually a startup originally, and Bloomberg acquired us at the beginning of 2010. We've always been very focused on what's going on in the clean energy markets, starting off with the renewable generation technologies like wind and solar. But increasingly, we've moved into other areas like energy smart technologies, shale gas, and advanced transport. We're spending a lot of time looking not just at bioenergy and biofuels, but also electric vehicles and the whole electrification of the transport system. And we look at the carbon and REC markets as well. In total, we're about 200 people, and we have analysts around the world, so we've always put our analysts where the action is, as it were, in terms of understanding these markets and these trends. So I'm first of all just going to show you a few numbers to illustrate what's been going on in terms of investment. It's been a record investment year in 2015. This is showing the pattern back to 2004. And we're now at a third of a trillion dollar industry in terms of net new investment going into the industry. So this is all the investment that's going into clean energy. A lot of it's generation technology, but the other areas as well. That's pretty incredible given what's been happening, for example, in terms of the oil price. And if you look at what happened actually to oil and gas expenditure in 2015, it fell by 36%. To the point where actually clean energy investment has been higher than oil and gas capex in that year. So this is no longer a niche or a small subset of the energy sector. It's very much at the heart and center of things. And it's having a disproportionate, I would argue, and disruptive impact on that system. If you look at the generation capacity additions, the numbers I showed you were the investment numbers. It's an even more striking story. We've seen over the last few years generation capacity go up by about 11.5% a year. And the reason for that is that the cost of clean energy is coming down. So in addition to those investment numbers, you're actually getting more value for every dollar invested, simply because the generation technologies are declining rapidly. And I'll show you some more evidence for that in just a moment. Going back to investment now, just in terms of power capacity, you can see that there's much more investment in renewables than fossil fuel. This is just looking at the electricity generation component of it. We've shown large hydro and nuclear by comparison. So I hope you'll get the sense by now that there is a huge amount of investment going into this area. Where's that investment coming from? Well, it's coming from around the world. We've seen a bit of a roller coaster ride in Europe. You can see the peak and the falling back to a more of a plateau level in Europe in terms of investment. The United States has kind of held its own over a number of years. The rest of the Americas, we've seen fairly steady investment. And Middle East and Africa, we're seeing quite a lot of extra investment there. It's accelerating, but from a relatively low base. But the standout growth story is Asia, in particular China, but it's not just China. We're seeing a lot in other parts of Asia, including Japan and the rest of the region. And that's very much a growth story, and it spans both wind and solar investment in all those countries, particularly actually in China. China didn't have very much solar investment until relatively recently, and it's caught up to more or less the same level as wind. I think I've jumped one. If you look at it by sector, this is color-coded. So the bottom area is wind, the blue area, and yellow is solar, and then we've got a bit of bioenergy and energy smart technologies on top. And you can see just how much of this now is solar, the yellow area. So when I started doing this, which was about 8 years ago, solar was roughly 20-25% of the total mix. Now solar is roughly 60-70% of the total. And the reason for that is the cost of solar has fallen much more rapidly than other technologies. That's not to say there hasn't been progress in wind. There has. But solar, in terms of technology progression or cost progression, is a very rapid rate of progress indeed. Quite a bit of that investment in solar is rooftop energy. If you look at the investment by asset class, and here the green area is showing where the sources of investment come from. The green area is essentially bank finance, project finance. So a lot of investment that's going into clean energy is just that. But there's an increasing amount that's the yellow area. In this case, it's small distributed capacity. And that's not all the solar, it's just the proportion of solar that I showed you in the previous chart that's rooftop. It's distributed, and it's growing. And the reason for showing this is it's a fundamental change in the nature of the network. We're moving from a system that's been primarily centralized generation with networks that transport that energy to the edge to one where there's much more taking place at the edge, in particular with solar. But we're now seeing storage, distributed technologies as well. I don't want to say it's a complete shift from centralized to decentralized, but it's a trend, and it's an important trend. Oops, sorry. Can we go back one? Yeah. Yeah, great. Just to give you the complete picture on investment numbers, VCP, I've enlarged the scale to make it a little bit easier to read, but you can see that VC&P activity in the sector, it has held up reasonably well. It's a lumpy or volatile set of figures, but we've seen a fairly steady trend of investment into the sector at the early stage level. And interestingly, not just in energy smart technologies, there's quite a bit of investment going in, but we're actually seeing continued investment in, for example, solar. You might think solar is a mature technology, having been around a long time. That you couldn't actually be further from the truth. There's a lot of innovation around solar. There's also innovation around the other sectors, including wind. So that's very important in driving the numbers that I talked about earlier. In terms of the growth of solar, one way of looking at it is cumulative investments in solar, or how much capacity has been installed cumulatively. And this is just showing the curve. The bottom curve is cumulative investment in solar capacity going back since 1990. And as you can see, it looks rather like an exponential curve in terms of its shape. For the mathematicians amongst you, just to prove it's exponential, we took the log of that curve, which is the line above, and that's a straight line. So it really is exponential. And it's growing to a point where now solar is, in capacity terms, over 3.5% of total global generation capacity. It's one of these phenomena where it's kept doubling and doubling again. The output level is even lower than 3.6% because solar has a relatively low capacity factor. So another way of looking at it is the costs have come down, it keeps doubling, and there's plenty of room for continued growth from today's levels. We spend quite a bit of time looking at experience curves. So a way of thinking about an experience curve is for every doubling of volume or cumulative volume in an industry, what happens to costs? So the answer is for solar, every time you double the volume, the costs have fallen by roughly 25%, 24% in fact. That's a pretty impressive rate of progress. We did the same analysis for wind, and I was actually surprised at how high wind was. It's 19%, so not as rapid as solar, but very creditable. And we're seeing a lot of innovation in wind around higher hub heights, better capacity factors, lower operations and maintenance costs. So it's a whole set of innovations that are driving those improvements. So these are technologies that have pretty high learning rates. In the case of solar, it's somewhat comparable with what we've seen in the semiconductor industry. That's a really extreme rate of learning, so it's not quite as high as that, but it's similar order of magnitude. These are very important because they affect the cost levels into the future. Another important factor, because learning is a scale game, is how long does it take to double your cumulative volume? I talked about the costs when you double the cumulative volume, but how long does it take? And the answer is we've had 7 doublings in the case of solar in 15 years. In wind, it's been 4 doublings over the same period. Those are both impressive rates of increase. In the case of solar, I think it's somewhat spectacular. The improvements around wind, I talked about some of these earlier. There are things like higher hub heights, better component costs, better siting where you put your wind turbine, and improved availability, lower and more efficient operations and maintenance. So there's a whole range of innovation going on here, and it's not just one silver bullet, it's a whole set of technologies or approaches that combined deliver this kind of progress. Just going back to solar though, one thing people often think about in terms of learning is S-curves. You know, you reach the top of the S-curve and it sort of plateaus. And maybe that's the end of it. Well, I would argue in many of these technologies, it's far from the end of it. This is showing it the other way up. It's showing how many watts you get per dollar, and it's a log scale, so it's similar to the exponential analysis. You can see it's more or less a straight line. But it's persisted through many generations of different solar technologies. So if you go back to 1975, solar panels were very different. I think they were even different, you know, chemistries and substrates in 75 than what they are today. So it's not just one innovation, it's a series of innovations over time. And nothing could illustrate this better, actually, than the semiconductor industry, which I use as an analogy, partly because they're both based on silicon. You can stretch that analogy too far, but just for a moment, looking at the semiconductor industry and seeing what improvements have been made in terms of calculations per $1,000 invested, you can see the same on a log scale linear progression. In this case, going back to 1900, and you might say, why have you done that? Well, this isn't one S-curve. It started with the tabulator, it then moved to relays, it then moved to vacuum tubes, it then moved to transistors, then integrated circuits, then systems on chips, and so on. And that exponential growth has persisted across a range of different technologies. And effectively, the industry's had to invent itself every few years. And we've seen solar do that. So that's why I would argue the innovation isn't going to stop anytime soon. And actually, we can already see a very clear pathway based on known technologies that could at least halve the cost of solar from today's low levels, and probably even more than that. So I think it's going to be doubling and doubling again and halving again. One thing I did want to say is in terms of innovation, we see a lot of this in terms of the technologies, but it's also in terms of business models. And a good example of this is what's going on in developing markets with off-grid solar. We've moved in countries such as Africa from relatively simple solar lantern systems to actually much more complex solar home systems that are capable of delivering not just lighting to people who are not connected to the grid, but increasingly, you know, power for radios, powers for fans, TV sets, and so on. So it's becoming a very distributed technology, often pay-as-you-go systems, so consumers don't have to pay the upfront cost on day one. They just pay as they use the system. And I think there are probably some people in the audience who are behind this kind of innovation in these companies. So it's a very good example, I think, of business model innovation that, in the same way as cellular had a real impact on communications in those countries, this could have a real impact on the core energy infrastructure. Finally, I just wanted to say one or two things about storage as an example. I talked a lot about generation technologies. One of the things about generation, and particularly as you move generation to the edge of the network, is you do need to balance it. And wind and solar are intermittent technologies. So although the cost of solar and wind may be low, they don't always generate when you want them to generate or when the demand is. So there's this important need to bridge the gap between supply and demand. Another way of putting it with solar would be, I think we'll have very cheap solar in future, but it may not be exactly at the time you want it. There are lots of ways of dealing with that. One is demand response, another is better interconnection. There's a whole host of ways of dealing with it. You can have backup capacity. But storage is another area. And here we've looked at storage in relation to electric vehicles, partly because what happens in electric vehicles will also drive the costs and the innovation that will be necessary for storage in the energy system. These are plot points apart from 2017, which is a projection, and they illustrate what's happened to battery prices so far. These are EV prices, and we're expecting battery prices to have fallen by 77% by 2018. But it isn't going to stop there. We've done a lot of modeling of this, by the way. We've looked at chemistries, we've talked to manufacturers, we've done a lot of modeling to project this forwards. And on that basis, we think that EV could reach cost parity on capital costs alone, let alone total cost of ownership, which will be even better, on capital costs alone with internal combustion engine vehicles. And clearly the battery is the biggest part of the cost of an EV. So that's very important in driving that industry around mobility that Jan mentioned as an area of interest, but it will have a knock-on effect to the energy sector as well. And I know there are companies like Sonnenbatterie, there are companies in the US and companies in Australia who are already doing distributed storage in conjunction with PV. I think we'll see much more of that in future. So just in summary, hopefully this gives you a sense of what's been happening in terms of the rate of investment in the industry. It's been very high. We've seen, by the way, a little bit of tailing off in Q1 of this year, so it may not be a record year next year, but with the cost progression we've seen, I think we will continue to see a rise in capacity from year to year. The costs are coming down fast. Clean energy is becoming ubiquitous, but we will need innovation and new technologies and new business models, actually, to balance that and make that work in the context of the energy system. Thank you very much.